Hello, welcome to another Hershey Financial Advisers information updates. So today we're going to talk about a very popular topic that clients have asked me over my 25 years. Where does gold fit? So first of all, I want to talk about it and say gold is unique in that gold will always have value. It's a precious metal. Gold also, in this conversation, we're going to talk about gold, but I'm also talking that the very similar characteristics for precious metals like silver. But first of all, let's start by saying this. Gold will always have value, but gold certainly gets out of its normal, like all asset classes, gets out of its normal cycle or out of its normal value relative to other asset classes. And that's really what we're looking at. We're looking for consistent performance that we can expect in an environment and where that fits into that environment. Gold can be very volatile. But what we don't like about gold is that it doesn't put off a dividend. So there's no dividend like a stock or coupons like bonds. Gold can really get out of position for a very long period of time, and I'll give you a couple of stats. But it will always have value. So I don't think any reasonable person would ever think that gold would go to zero. Where if you look at things like cryptocurrency, that is very reasonable to believe that quite a few of them will go to zero. And same with stocks. Stocks will go to zero. Bonds will be worthless. But a diversified portfolio over many different industries, sectors with stocks and bonds is a very different thing, where gold is essentially a spot price that all gold fits into that value. So the diversification in among gold, there's really not diversification or not much opportunity for diversification because gold is a general spot price. So let's just kind of go through gold. Gold is a hedge against inflation is a general consensus. We'll kind of talk about that a little bit. And gold is a doomsday asset class of where you can have gold coins and use that to exchange money when everything else fails. I think there is value to that if that's someone's premise to have some diversification in gold. The biggest thing with gold coins is that now you have to worry about theft. So let's go to gold and historical value that relative to inflation. So when times are stressful and people are worried about the future, they tend to drive up gold prices. And there's major change going on in the world. Right now is a good example. Gold is very high right now. So if we go back to other periods in our lifetime, if you look at the 1970s when inflation was high, government was big, and there was a concern about inflation continuing to tick up, gold was moving very quickly in the late 70s and early 80s. Volcker, the Fed secretary at that time, moved price interest rates up rapidly and broke inflation. When he did that, that also brought down gold prices. So at the peak of gold in the 1980s, adjusted for inflation, didn't recover above basic inflation or above consumer price index until the whole way to July of 2011. So from 1980 to July of 2011, all the costs of storing your gold, all the value of your gold was in negative position for that many years, which is a long time, 30 years. And then it dropped back for a year. It stayed above that value and then dropped back again below that, 20 to 30% below that again from that new peak in 2011 until July of 20 when COVID was happening. Gold came back up again, and then gold dropped back down, and now it's back up above that and continuing to rise in this period we're in right now. So June of 2024. So basically the long term right now, looking at from the early 80s to June of 2024, to right now, you're sitting in the middle of 2025. Inflation is about, long-term inflation or consumer price index inflation is about in line with gold. They're about 15 basis points, 3.67, 3.53. They're about in line with inflation. If you go back from the early 70s, inflation was higher during that time period, and gold was higher, and gold is more like 5% if you're looking at a longer term compared to inflation of about 3.9 compared to 5.74. So over a longer period of time, gold tends to do well, but it also tends to get really far behind general inflation. And obviously during that period of time for stocks, you're looking at during that period we just looked at from 80 till currently, you're looking at stocks being more like 10+% and a large small cap, diversification, and bonds were in the upper single digits. And actually during that time, up until the great financial crisis, treasuries were in 5, 6, 7%. Now they've dropped down to 2 to 3 historically. So again, looking at that, the bottom line is gold an investment class that people should consider in a doomsday scenario? Yes, but look for decades of being behind, falling behind, and being under the even just basic inflation, which could be covered by being in a 6-month CD. So gold can definitely get out of favor for an extended period of time. And so for an retirement account or any kind of account that's designed to replace your income or meet a goal, you want to really be careful how much money you have in gold if you want to some level of predictability in a diversified portfolio. So thanks for tuning in to another Hershey Financial Advisors economic information video. We look forward to providing more of these to you. If you have any questions or concerns, or want to see some more charts and scenarios, please let us know. And we look forward to talking to you soon. Thank you.